Hi, welcome back to today's More Report. Charter Appraisals on Monday, the 18th of January, with me, Richard Perry, market analyst at Handset Markets. Let's look at cable, and this cable chart that has been falling so precipitously in the last few weeks. Again on Friday, massive strong bear candle, 42.47. Now, let me just show you. 42.30 is this 2010. That's May 2010 low. Below that, I suppose the next level is 40 figure, because that's a psychological level, and then you're not sort of looking at anything until really these lows back from sort of 2009, which is sort of like the mid 35 figure area. So I mean it just looks awful, doesn't it? Let's be sensible, this cable chart. Massively oversold, and the RSI is 17 Friday. Just bounced slightly today. Would you trust a bounce? No, you wouldn't. The only thing that I'm a little bit wary about is this sort of acceleration of the down move. I wouldn't say it's accelerated enough yet. It's not really gone hyperbolic, which is tends to be what you see with massive sell-offs, like the culmination sell-off. I don't think Friday was a culmination sell-off, but the worry I have is the fact that this downtrend, you could still have easily have a technical rally within this downtrend up to 45.20, which is currently where it is. And that's 220 pips from now. And that's bearing in mind we've already seen sort of 50 pip rally this morning. So, yeah, I'm not entirely happy with sort of continuing to go massively short, and I think in this environment you've got to stay stay close with stop losses. The strategy I would do is sort of maybe have stops around about the old supports. If you started to break above that level, because this has been a consistent chart. Where the old supports have been new resistances. I've talked about that numerous times. Your old supports becomes new resistance. Old support becomes new resistance. Old support becomes new resistance. So the latest one is 43.50, which was that old support from what was that, Tuesday last week. So that is your new resistance, and you're sort of 90 ticks away from that now. So if you had a 43.50 rally, that's 150 ticks off the bottom, pretty much. Sorry, my math is rubbish. 100 ticks off the bottom. So that's a pretty sizable rally. That would be if you got to 43.50. I think if you got above that and started moving seriously above it, then I think that would potentially be a turnaround. But technically speaking, you'd still say that you're negative on this chart until you hit this, I'd say this 89-hour moving average, which has been a pretty decent basis of resistance for the big rallies anyway. Several times the big rallies have hit those. Now this rally here, 45.30 up towards 46.50, again 120 pips. So this is it is the sort of rallies that you're looking out for. 43.50 to 44.75, again 130 pips. So maybe 150 pips is the sort of rally that you could expect. If you get through that, then maybe that's up and away. 43.75 up from 42.70, 42.50, again 125 pips. So maybe that is within the realms of possibility. 125 pip rally. We've currently had 50 of that, and we're about 75 pips off that falling 89-hour moving average. But I think much beyond that, I think you'd be looking up for a possible recovery. So watch out for the RSI, hourly RSI above sort of 50-60 area, holding above that. Watch out for the hourly MACD holding above neutral. So all these little things that you can start to look out for. But at the moment we've got a little near-term bounce, but how big is it going to be realistically? So a few ideas there for the possible turnaround, but at the moment we're still obviously selling into rallies. So I wish you good luck in your trading, and I'll speak to you later.